Solana ETFs are seeing strong investor interest even as the token itself struggles to recover 2025 highs. Now, over the past week alone, Solana funds have taken in more than $670 million in net inflows despite a broader crypto sell-off and a sharp drop in Sol's price from its January peak. And the funds have attracted steady buying since launching in the U.S. this year, signaling growing institutional interest in Solana's blockchain tech, even as short-term price pressures persist. Well, joining me live here at the New York Stock Exchange is Kriskey, head of Alternatives ETF Strategy at Invesco. Thank you so much for joining me and happy holidays.
Same to you, Remy. Happy to be here.
Well, 2025 has been quite the year, but first and foremost, I do want to get your take on where we are right now when it comes to crypto.
So we are in a bit of a correction. So I know it's frustrating for a lot of investors because we've literally wiped out all of this year's gains. So it's very frustrating. But I do believe in the premise that this is a long-term hold. So I am a dip buyer, and I like, again, Bitcoin, for store of value and the scarcity issue. Ethereum is linked to stablecoin, right? It's the blockchain used for stablecoin. And lastly, Solana, right? I think it's the new upstart. And but I do think let it calm down, right? And be dip buyers. One of the things that Galaxy, our partner, is looking at is these moving averages. And so the big concern is that we need to get back above 100. So I know we're just broke 90 in Bitcoin, but getting above 100 is key for Bitcoin specifically. And I think it drags all the other crypto with it higher.
And speaking of which, here on Wall Street, there might be a lot of focus on the crypto majors of Bitcoin and Ethereum, but when it comes to Solana, walk us through why you think this is an investment case.
Well, actually, I'm obsessed with Solana right now, just because, as I said, we partner with Galaxy. They're one of the top traders of Solana, so we've learned a lot from them. So I believe, like Paul Atkins, our SEC chair, has said that he really wants to get all of finance on-chain, on the blockchain, right? And I believe that Solana is the blockchain that will be used for that, for a few reasons. But one is, it's really cheap, right? As some people always joke, it's almost free. It's really fast, and it's also scalable. And so one of the analogies I love is when you look at the each cryptocurrency, the three main ones, have a purpose, right? But the analogy I love is Bitcoin is like a road that you've gone on many times, two-lane road. It's reliable, it's trustworthy, you know where it is, you know how to use it. Ethereum is like a superhighway, right? And you can go faster, you can do more, but there's tolls and sometimes there's construction, but it's still a great superhighway. Whereas Solana is like a bullet train, right? You can go really fast, you can travel all over the world in terms of scalability, and it's really, really cheap. So that's why I think that in the competition for blockchain and what we are going to be using to getting finance on chain, I think Solana will be one of the big winners in that arena.
Yeah, and I think that's a good analogy there when we're taking a look at the major cryptos, tokens, as well as the technology behind those crypto majors and of course Solana. But recently we have seen a rush for Solana ETF. So what do you think is behind this, and what does this actually tell you about demand from the investor side?
So we today are launching our Solana ETF, QSOL, and it is, I think it really is the public demanding it, right? So after Bitcoin and Ethereum, there's a lot of retail interest in Solana, and it's funny, every time I travel around and I talk to people that, oh, I do digital assets, and they say, what do you think of Solana? I've owned Solana, I've owned it for a while. But the problem with Solana right now for investors is it's still volatile, right? Bitcoin volatility has come down dramatically, right? The volatility for Bitcoin's in the 30s, but Solana in this past year, the volatility was over 100%. So it is not for the weak of heart, but I'd say still with the allocation to cryptocurrencies, it has a place to in a portfolio. And again, I believe that the people that are frustrated that they didn't get into Bitcoin at lower levels, Solana is still a very new story. So I think for those investors, again, go in, small allocation, but I think that it has an amazing future ahead.
Yeah, you bring up an important point when it comes to Solana, and you just mentioned QSOL, and that is launching with Invesco and Galaxy. So can you give us a little insight when it comes to the structural details of the fund?
So a lot of these ETFs are very similar, but what makes us different is really our partnership with Galaxy, because we were not cavalier and saying like, oh, we can go this alone. Invesco, we're experts, and we have become more experts. We've hired Kathleen Wren, who is our global head of digital assets, and she is really a digital native, but Galaxy gives us credibility, gives us know-how. They are our execution agent on all of our crypto ETFs, and that makes a real difference. So for that reason, especially for our BTCO, our Bitcoin ETF, we're the closest to the spot price of Bitcoin. And that's ultimately what investors want. When they buy the ETF, they want it to trade as closely to the physical Bitcoin as possible. That's why BTCO is the closest. But again, we hope that's going to be happening with QSOL. We'll wait and see.
Yeah, we'll definitely wait and see what happens, but this is the time of year that we start looking ahead and also look in the rear view mirror. So when it comes to the regulatory landscape and the implications of what happens in our nation's capital on digital assets, what are you paying attention to as we head into the new year?
Well, I feel like this administration has been a game changer for crypto, and that's why President Trump has really delivered on a lot of things that he said he would do, and so I think that, again, I'm looking to the SEC to see what Paul Atkins does for that, but there is so much going on and changes ahead that it's actually a very thrilling time to watch the regulatory environment. It's almost the reverse of regular finance. As a regular finance person, we hate regulation. We're like, oh, more regulation. But this industry has been begging for regulation, and so that's why with every new rule, people get very excited. But I feel like the fact that so many people in this current administration are crypto fans, that is the game changer. So I think 2026 will be a big year. We accomplished so much in 2025, but even more in 2026.
And for viewers out there who might be watching right now, they're thinking about portfolio allocation when it comes to digital assets, whether we're talking about the actual tokens itself or funds. What would you say to them right now?
So I'd say go small. I know we'd love to say, oh, 15, 20%. No, I'd say 5% max for me. We had a conference recently and we had digital experts on the stage, and they all said 1, 2, 3, 4, 5. And then when they got off the stage, I know them and I said, what do you guys have? And they were 40, 50, and 60. Right? So the average investor should not be going that high. These people, their lives are attached to that. But I'd say asset allocation, 1 to 5%. But also the thing that's frustrating is no one's rebalancing. As investors, we are taught to rebalance, take profits, and that's why I think we're seeing some of the correction now, is that people were taking profits, but not of this year, but of years that they've invested in. People that got in 2024, when those original Bitcoin ETFs were launched, are way in the money. My favorite purchase was $54,000 for me, right? But I haven't rebalanced. And that is one of the issues with crypto investing. We have to be more disciplined about rebalancing, but people always say once you buy the crypto, you probably never sell it.
Yeah, and I think it's easier said than done when it comes to rebalancing. But you mentioned SEC Chair Paul Atkins, who was here at the New York Stock Exchange recently talking about crypto innovation. But when we take a look back and look at the performance of crypto earlier this year and where we stand right now, I do have to say we are looking at red for the crypto majors. But one bright area when it comes to asset classes, of course, are the equity markets, but of course, gold, silver, copper. So what's going on there, Kathy?
It is a very exciting time for commodities. As you know, that is my love, commodities. But gold, it is the best performing asset. Now, silver was better. Silver year to date is over 100%, right? And gold, probably 60%. And we may actually hit a new all-time high today. So we're watching it very closely. But really, it's multifold. There's a lot of issues going on. We had it to start with the, central bank buying, and then we had, the Fed just lowered rates, right? So those ETF buyers love that story. When the Fed lowers rates, they want to come in and buy the gold ETF. But really, it is uncertainty, right? That is the word that people used in 2025, and people are a little concerned in 2026. But I think one of the risks we have as gold investors is the correlations to equities are getting closer because the average investor now holds gold. Whenever I'm presenting and I say, does anyone own gold? They all raise their hands. I was like, congratulations, you've made so much money. And silver too, but smaller, more volatile market. But I'd say that as 2026 comes on, remember, everyone's going to be positioning for the midterms, right? What the government's going to do to get ready. So we should be feeling really good about the economy in a lot of ways. So that could actually hurt gold. Also, if we end some of these wars, that could hurt gold. But still, I love it. I think that it is a long-term hold. I think we are going to see future historic highs in 2026. But again, it's not going to be just on a straight line up.
Yeah. And speaking of which, we'll keep a close eye on gold prices this morning because, as you mentioned, we are fast approaching those record levels. So we'll see what happens in today's session. But finally, before I let you go, 2026, a lot to keep our eyes on, especially when it comes to the nation capital for regulation, but also monetary policy. So when it comes to the central bank, what are your expectations? What are you watching and why?
So I am one of those people that is concerned about Fed independence. So I know that's not our party line, but I am worried, right? And I always look back to the 1970s with Arthur Burns, such a brilliant man, and but he lost his independence. So with a lot of what's changing, I am concerned about that. And what's the best hedge for all of that? Gold, right? And also broad-based commodities. And one of the other commodities you mentioned is copper, right? And I think that the copper story, the industrial metal story is so prevalent right now. And again, hitting historic highs too for copper. And so I do believe we have a product, DBB, and I'm a huge fan of it, Delta Bravo Bravo, and it has copper, aluminum, and all the other industrial metals. But I think people should be focusing on that too for a lot of what's going on, the buildup in the military globally, also reindustrialization in the U.S., and we just don't have enough copper.
Well, Kathy, we will have to leave it there, but always great having you on the show. Happy holidays, and hope to have you back in the new year. Happy holidays.
Thanks so much, Remy.
Thank you.